Hi, this is Kerry Artak with Wicked Signal. Today's video analysis is in ALRM.com Holdings, Incorporated, symbol ALRM. This video was recorded on Monday, December 7th, 2020. If you don't know much about Alarm, you might not. It is a US-based technology company that provides cloud-based services for remote control, home automation, and monitoring services. They've been around for a while. IPO was in 2015. You can actually take a look at the stock here. This is the entirety of this stock's existence. Before I jump into today's analysis, I must tell you about wickedsignal.com. If you haven't already done so, or you can tell your trader or investor friends to please go to the website, wickedsignal.com, click on free subscription, fill out the free trial form, or the subscription form, first name, last name, email address. You or they will receive an email every time a new video is uploaded for viewing. I don't fill your inbox with sales pitches, and I do not share your personal information with anyone outside the organization. So without further ado, let's jump to alarm.com Holdings. This stock, let's take a look at the history of this. From 2015, the low was 11.10 shortly after the IPO. It rallied to 2019 to 71.5, then broke the COVID low about a year later or so at 32 even last spring, and since then has been in a nice run, nice bullish rotations, some pullbacks, but the high so far on this stock historically was put out this week at 80.99. And in fact, looking at this chart, you can see a long-term channel formation that this week is at 79.07, and it rises 4 weeks later to 79.42. You can subtract those two numbers out to have the exact location of that channel top through the month of December. Now, it just so happens that we did close above that formation last week, but it was right at the 1% violation. The settlement was 79.80, and the 1% violation of 79.07, or at least that formation last week, was right around 79, 75, 76, something like that. So it was just above the 1% violation. So it is a valid buy signal, but it's very close, and I think it deserves another week higher. I'd like to see this stock close above 79.80 at the end of this week, just to sort of lock in that long-term buy signal. But I think this is a stock worth watching. You could even scale into a long position here in the 79.07 region. That is your floor of support. And we can zoom in a little bit and take a look at the last couple of years so you can see this formation that we clearly did settle above it last week. We're trading right around just above this formation so far this week, first day of the week. We dipped below it actually today. We get down to 78.19, so it is a pretty fluid market. But on a week-by-week basis, if we're closing above the 79.07 formation, rises to 79.42 in a month, this market remains bullish, not only near term, which I'll show you in a moment, but even long term. In fact, near term, assuming we get these higher settlements on a week-by-week basis, and all we really need is a settlement this week above 79.80, I think, to be a higher settlement on the week, and then clearly above that 79.07 formation. We should, over the next month or two, continue into the 90s. That 92, 95 level, I think, is kind of a realistic 4-week target. It could certainly take longer than that. It could take 6 or 8 weeks. In fact, as we continue into the middle part of January, about 4 or 5 weeks from now, 6 weeks from now, we get into the 20% gains if you were to buy in this vicinity, and if we were to test that channel top, say between now and the end of January, it would represent about a 20% gain. So that's a near-term move. That's a 2 to 3 week, 5 to 8 week target, somewhere in there. Obviously difficult to ascertain how long it will take to get there, but that would be, I think, roughly about a 20% move from present price levels. But I do think longer term, because this formation that was recently settled above last week, this week at 79.07, is such a long-term formation, longer-term violations tend to have longer-term consequences. So the first study that I look at in terms of just sort of big picture is the full price swing that I see that is possible now from the 7150 high in 2019 against that 32 even low last March. A full swing, in other words, subtracting 32 from 71.5 and then flipping that 100% to the upside is 111 even. And I'll continue on with this concept. The full channel extension, which you've probably seen before in some of my analysis, not significant resistance, but a realistic price target longer term. So we could continue all the way into the 110s, 120s. I've got that 125.50 full channel extension as August of next year. And that's about, if you're looking at this chart right now, that's about as long as it's taken from the March low of 32 even to the most recent high in around 70, whatever it was, $81 and change, I believe it was last week or this week. Anyway, another one of those, is about 8 months. So if this continues at the same pace into later 21, it's not a stretch to anticipate the possibility of the 120s as we continue into later half of 2021. I know this is all big picture. This is kind of a swinging for the fences here, but it's realistic as far as I'm concerned. Is it likely? Well, that's a whole nother story. But I would anticipate that as a clear possibility as we continue into later 2021. Now, let's finesse this a little bit. The 7907 chart support, and I'll just tell you where it is that we're wrong. And it's pretty simple at this point in time. The high so far this week is 80.99. The low of the week is 78.19. So far on the weekly chart, 78.19 is the low of the actual record move high. And there is a very simple sell signal. I think I've even talked about this before, that if you close the week below the low of the high, and so we would obviously need another week of this. I'm just sort of finessing this as we continue into later December. Let's say that the 80.99 high holds this week, and so does the 70.18.19 low. I don't think it's likely, but I'm just giving you an example of what to look for. If the 80.99 high holds, and even if we back off to 77 or 76 next week, that is the low of the high. Closing below the low of the high is a sell signal in itself, and that would be reason enough to bail out of a long position that you may have entered into above this 7907 channel top. And in which case I would expect the 69 even formation, which is in later December, within a matter of 2 or 3 weeks. So this is all sort of on the defensive, what to do if I get long here in the above the 7907 formation, which you can see in this final slide. If I get long in the 7907 formation and I'm wrong, those last 2 slides sort of help you with what to do, where to get out on just a pure technical basis. But your risk management approach may have forced you out of the trade earlier than that anyway. And I don't like to get too deep in the weeds on your risk management. I'm just giving you the cut and dry technicals. So I'm going to leave you with this slide, this last slide. We settled last week above 7907, that formation. We settled above it even by a 1% margin, but just barely. And last week's high was 78.90. I'm sorry, last week's high settlement was 78.90. If we can close above 78.90 at the end of this week, this is a market worth pursuing. It's already a market worth considering scaling into a long position. But if we close higher on the week, in other words, on Friday above 78.90, this market should continue up into the mid-90s between now and the end of January. And as you see here on this chart, the 110s, 120s wouldn't surprise me in the least as we continue into later 2021. And that's really all that needs to be said for this particular Wicked Signal video on alarm.com holdings.